and welcome to Moneycontrol. You have tuned into IPO Watch and I'm your host Nickey Mirchandani. The initial public offering of K SWAMY has hit in the primary markets today. The issue has been subscribed by as much as 16% on the day one in the few hours, and 70% of the total retail book has been lapped up until 11 a.m. data that we have. The public issue will remain rather open for subscribers till March 6, 2024. The integrated marketing communication company has fixed in the price band at rupees 270 to 288 per equity share. The company aims to raise in 423 odd crore from its book build issue, which is a mix of fresh issue as well as OFS. But to know more about the company financials, the strategy and the USP, we're being joined by the group CEO and the whole-time director, Mr. K SWAMY, and the group CFO, Rajeev Newar, who joins us here right in the studio. So let's start off with the basic OFS. It's a mix of both. How do you intend to utilize the proceeds? Your company is one of the leading integrated marketing services group within India. As per the RHP, it's ranked 8th in terms of estimated operating revenues. Tell us more about the company, about your clients, about the fundraising. How do you intend to scale it up?
So, Nickey, thank you for having us on the show, Nickey. If you look at the integrated marketing services space, we are among the top 5 in the country. Now, this integrated marketing services has 3 segments. One is the integrated marketing communication, where we are the 8th, and the other one is the analytics, we're in the top 10, and the other one is the research, where we are in the top 5. But at integrated marketing services, we are in the top 5 in the country. That's one. Now, we have had a good run, I would say, in the last couple of years. We have grown at a CAGR of almost 30%. Now, what we are doing is we are basically raising about 423 crores. Of which about 250 crores is basically OFS, and about 173 crores is for primary. Now, I'll give you a breakup of this primary of 173 crores. The first is clearly we are setting up a digital studio, so where we can produce more and more video contents for our clients. This space has grown for us fairly well in the last couple of years. Between 21 and 23 has grown by almost 90% plus. To make more videos, we're setting up a studio. That's one. The second is in the space of analytics as well as in research. We have grown by almost 40% of the last 2 years. We are doubling our marketing infrastructure. Okay. That's 2. Okay. The third is that in this space there are 2 very critical elements. One is I'm not sure whether call talent as an element, but talent is very important in this business. The second is obviously technology. So the third spend is towards technology, because we are undertaking a technology refresh. That's a third one. The fourth one is basically working capital. And essentially, when you talk about working capital, if you look at this business, H1 is typically about 40% of our top line, and obviously H2 is about 60% of our top line. Further, we have also set out outlined some growth in some new business initiatives over the next couple of years, and to enable us to undertake some of those business initiatives, we've also set aside basically working capital for our business. For us, basically capital is essentially working capital. But maybe I can request Shekhar if we can talk about some of the new business initiatives.
Sure.
So just to interrupt there, apologies there. So 5th in terms of the integrated services and 8th in terms of the operational revenues as compared to the peers, right?
No, 5th is, okay, what we classify ourselves integrated marketing services. Right. The integrated marketing services has 3 segments for us. The first segment is the integrated marketing communication, where we produce the content and we place the content on behalf of our clients across various media platforms. Right. That's the first piece. In that space, we are ranked 8 in the country. Okay. The second space is the customer data analytics. Right. In that space, again, we have a leadership position in the country. And the third space is basically the research, which is the marketing research, where we are among the top 5 in the country.
Sure.
So the aggregated rank that we talk about is all 3 put together, which is in the top 5.
So how do you intend to scale up, gentlemen, after that? Like after reaching these ranks that we're talking about, what's next from here on?
The scaling is a function of the market, right? So the market is growing, our clients are growing, our clients are all mostly large business groups, large brands, large institutions.
40% from the top 50 or top 10?
Top 10.
40% revenues from the top 10.
Okay.
And these are all companies with the wonderful thing for us is that we have to be very close to our clients, which we are, which is in our DNA for the last 50 years. Our clients grow, we grow with them. So the number one, people always ask us, what's your new business strategy? Our new business strategy is be embedded and do what is relevant for our clients. And as they grow, we grow. And their growth is also complex. This market is extremely competitive. When I say this market, I'm talking about the India market. And in a competitive market space, to be able to provide different disciplines of marketing services as relevant, as appropriate, fashioning solutions for our clients is a good space to be. And that's what we do, and we enjoy doing it. So clients give us the permission to do it. So karte raho. This is our growth strategy in a nutshell. And there are many other initiatives as well, which I can talk about.
We are definitely going to talk about those as well, but let's talk about the basic first, cover all the bases. Like the company has an asset light model with more than 20% ROCE. How different is your model versus some of the peers? That's one. What's your unique selling point? Of course, also how do you intend to scale up organically versus inorganically, internationally too? Tell us more about those initiatives.
So frankly, the asset-light model applies to the sector.
Absolutely.
We are a services business, and I don't think that's unique in any way. How do we compete? I think we compete on the basis of what we are a knowledge-based service.
Right.
So the more we know about our clients, the more we know about this marketplace, the more we can be relevant for them. That in itself is, if I may use the language of competition, it's a growth. It's A, growth engine, and B, a competitive barrier.
Okay.
Because when you're working with a client for decades, what you know about them is actually very instinctive. You have institutionalized that knowledge. So somebody comes along and says, now I will do a better service. The client looks at them and say, well, you don't know as much about us as this particular partner is doing for us. So I think the growth comes from there. So it's knowledge-based, results-oriented. We have to all the time be producing results for our clients, because that's the only reason why we have a permission to sit at the table. The moment we become irrelevant or we become inefficient, then we are out of it. So I think
that's the case with most of the businesses, just not yours for that matter, even us for that matter.
Absolutely. So that doesn't change, right? So it's a professional service business. You have to be at the cutting edge of the service, yeah. So
what's your USP?
I just said that. I think we are deeply embedded in terms of knowledge.
So would not someone who's probably been with you for this long want to experiment more, or probably with the whole foray of digital now in place and different ways of how people can look at things and the mediums that have been tapped on, don't you think there is little more competitiveness now because anybody and everybody precisely wants to be there?
So the digital ecosystem is a fantastic ecosystem. Just think about this for a second. What is digital? The platforms. What have you got in front of you? A telephone, a mobile phone. What are you as a consumer consuming on it? Content. What kind of content are you consuming? Mostly videos.
Yeah.
If you don't like the video, you won't share it.
Right.
So the video explosion is phenomenal. Think about this from a company's point of view. They have to produce content today to engage with their consumers, and that content happens to be videos. So our scale of production on videos has escalated in the last few years dramatically. When we go and fashion a solution, there was a time when you could have done 1, 2, 3 commercials for a client or a brand, and they would have been quite satisfied with it, and they would take 2, 3, 4 months to labor over producing a commercial. Today it's done at the speed of, it's like we produce dozens of them.
Right.
And that's what goes on the various platforms. Number one media today is the client's own website. It's owned media. There is no cost of distribution in that media. And then, of course, there are the platforms where you obviously can do it. And then you can scale it further if you are willing to spend some money. So the requirement for content has exploded.
Sorry, excuse me.
And our game is, and what have we been doing? Here is my definition of content. Content is nothing but words and pictures. We have been doing words and pictures, putting them together in an interesting way only for 50 years. You ask for USP, I say that is our USP. Match our legacy, match our track record.
So how much is your revenue per client on an average basis with this?
He'll tell you the top ones at least.
At least for the top 10 in that case.
So Nickey, we catered to about 475 clients in 2023, up from almost 411 clients in 2021. That's one. If you look at the top 10 clients who have been associated with us on an average of close to 19 years plus, the share from there have grown from an average of about, say, 7 odd crores in 21 to about 12 crores in 23.
Per client.
Per client. So that's the kind of growth. And overall, if you look at our overall top line also.
That goes to how much for
it's
the
almost
next?
60%. So if you look at even at the top level, overall revenue size, our revenue from operations between 21 and 23 has also grown by close to about 60% over the last 2 years.
And how do you intend to scale that up further? I think we know the basics of this industry. We know what's in the financials.
Yeah.
That's there up for grabs, even if in a normal website. That this is the point we are trying to make is how much intentions do you have to scale up?
Scaling will happen on account of a few variables.
Correct.
Sure.
First is existing client growth. They will grow. We hopefully continue to be relevant for them, and we will grow along with those. It's a secular growth.
Sure.
Same story.
The second level is what is a new attraction, new pipeline. We
Right.
always have a pipeline. Clients are contacting us, they have needs, and fortunately that is a continuous story. The third is geographic expansion.
Right.
So we have some plans we have already in Dubai and Bangladesh. We are also looking at, here is an interesting fact about India, which all of us know. States are vying to be trillion-dollar economies.
Okay.
Okay, so forget about India saying yes, we want to be X trillion or Y trillion or whatever it is. There are at least half a dozen states in the country which at the state level want to be trillion-dollar economies. Each of those represents opportunities. So there are not many countries in Europe, for example, with a trillion-dollar economy. And in India, we're going to have very many of them. So we are always looking at this and saying, okay, what else can we do geographically?
Right.
And therefore, you have new clients and new marketers coming in all those locations, which are, I think, ripe for our type of work. So that's another stream of work. Then we have new initiatives. We just kicked off the K SWAMY Center for Study of Indian Markets. It's a center which will do original work. It will be ahead of the curve in terms of it's not client driven. It is more what we think is relevant from the point of view of clients that they should know about the market. So we just launched a study on how India watches cricket. We did it for World Cup.
Right.
We are the only company today which has a good grasp of how that whole 500 million universe of cricket watchers have actually interacted with the television and OTT platforms.
Right.
And this is useful. We are going to continue this kind of original work. This is useful for clients when they are planning for the next foray into the next, let's say, title, tournament, whatever the case may be. So original work needs to drive it. We are also looking at a brand and marketing consulting group. We have always had a demand for consulting services. We've done it to some measure, but this is something that, and again, all in the space of marketing. So this is another initiative that we will have. Therefore, that's another group that we will be forming. We have a consumer data platform that we want to create. That's another piece that needs to come into play. So and there is an auto marketing and digital at scale, content at scale, which is why one of the objects of the issue is. So there are plenty of initiatives on the anvil. We are like kids in a candy store.
Spoiled for choices.
We have to engage. No, and the marketing.
But that still dodges away the question. The key question that I wanted to understand. Let's ask it in a little different way. CRISIL estimates the marketing and the data analytics to grow at an average CAGR of roughly 12% from FY23 to 28. What do you think about it? You've grown at 8% over the last 5 years. That's one. Do you think you'd be able to outperform the industry growth as per the rating agency's number that we've put across?
So Nickey, what I can share with you is a couple of interesting facts which will help you to take your own call. If you look at the last couple of years, the industry has grown.
Sure.
At what we call it an appreciable pace.
12% is what CRISIL really puts it up.
No, that's future. I'm talking about, first let's talk about, take a step back. And let's look at, if you look at step back and look at each of the segments.
Okay.
The integrated marketing services space over the last couple of years have grown almost in 2 year period have grown by almost 60%.
Okay.
we have grown up about 90%. If you look at the analytics and research space, it's grown by about 32 and 18%. We have grown up by 40%. So we have grown at a pace which is faster than the market. So let's keep that aside. That's a historical number. Going forward, as we said, we have outlined the growth philosophy that we have, or the business philosophy that we have. And we are very mindful that clients are important in this business. We continue to be close to them. Talent is also very important in this business. Just to give you an example, that while the entire ecosystem is close to about 2,400 employees or associates, the key 60 employees who have been associated with the group have been associated with the group for an average of 14 plus years.
Okay.
And we believe that it's very important to continuously engage the stakeholders in an appropriate way. And that's the only way for this business to sustain and grow.
Sure.
So
what about the numbers? My question still remains the same there.
No,
it's 10% CAGR that the crystal puts the growth. You think you can do a number? In the past, you've done that.
You're a persuasive questioner. So and
that's
I applaud,
my job. I pretty much get paid for it.
I applaud you for that. The reality, as you know, is that forward-looking statements cannot be made by us.
No, sure, but you can give me a ballpark understanding of how things
Any ballpark is anything forward-looking.
Sure,
I'll come and talk to you.
12% is what Crystal is painted for the next 5 years. Do you think you'd be able to outperform the growth? You've done that in the past. Would you continue to do in the future? That's the bare minimum.
I think I think we have answered it from the point of view of the various initiatives on the annual. I'll give you one other historical information.
Okay.
We
that
started.
Wouldn't let me know whether you're going to outperform the numbers or
no.
Which
But
is the crux of it, right?
You and the viewers and whoever is listening will get a pretty good idea of what I'm saying. We started a data analytics piece, customer data analytics, zero start, in 2008. Today, that business is contributing 80 crores to our revenue. First 5 years, we were wandering around evangelizing and trying to make sense out of this data flow that is happening in the companies. And eventually we hit our stride, and then the services kicked in, and more and more relevance kicked in. The initiatives, when we talk of initiatives, these are all when we started talking of customer data analytics, within our own group, there was a lot of skepticism. Hey, what is this? How are we going to do this? Because we are traditionally a content company. We like to do the words and pictures, and we like the soft stuff, and everybody's talking of branding and then mass media and so on and so forth. And here is another completely different scale of thinking, which is, okay, let's look at one-to-one. If you look at I spoke about the Center for Study of Indian Markets. There is no such center in the country. Okay. Now, how do I put a number to that? I will not. Till we are clear of what we are doing and the kind of studies that we are capable of producing. Why we are doing it is because, at one level, we have a sense of the market, which we have developed over the years.
Correct.
B, we have a data gathering infrastructure within our system. Okay. We have the capacity to go anywhere in the country and produce volumes of primary data.
Okay.
Which is a rare combination. So you put this together, you produce some original report. We do and we continue to do the K SWAMY Guide to Market Planning, for example. We have done it for 30 years. Original work. Nobody has been able to replicate it. That's the kind of original stuff that needs to go in. A, at a brand level, it works. B, at a customer relevance, customer here is my client. At their level, it works. So my simple point to you and everybody is, these are initiatives on the anvil. How long they will take, what trajectory they will take, where they will go. I will be the first person who will foolishly make a comment on give you a number.
No, we need a very logical comment to that. So I'm going to hold on to that thought and ask you perhaps about the diversified industry groups that you've been catering on to. Close to 70% of your revenue comes from BFSI, FMCG, retail and automotive industries put together. That's a combination there. The little that I could study from your prospectus there, I could see a dwindling trend coming in from BFSI segment and a little more pickup coming in from the automotive when it comes to the revenue contribution over the last 3 years. Does that change now going forward, or do you intend to put in or cater to more clients or industry for that matter, which could change this revenue mix in any given way substantially?
The question is at a sectoral level. I
Sure.
believe it will not change. But more importantly, the way we look at the sectoral level information has been gathered and put out so that people get a glimpse of what we do.
Correct.
However, our focus is not so much when we do our planning and when we do our analysis and when we are doing our resource people allocation and what we are doing it at a client level. So we do it client by client, and client dynamics vary. This year there may be a client who is, let's say, an auto company doing 3 launches. They will have a different level of engagement. Next year their launch pipeline is, let's say, come down a bit. The engagement will naturally come down. Likewise, BFSI. Our business rides on the back of the amount of initiatives and effort our clients are putting into their marketing and their business plans. So I think what will happen is this is not going to stop. And our clients, one more thing, it is clearly there in the profile, and it's a strategy. We work with large groups, we work with large brands, and we work with large institutions. In 2007, we made a statement that we want to work with institutions at the foundation of the nation.
Right.
Today, it's a fact.
Right.
So when you look at the kind of complex client environments and engagements that we have and their needs, suddenly, it can be pretty straightforward and suddenly they will explode because there is a requirement. We have to be ready to be able to provide for those spikes in the game. And that's really where we earn our stripes. The reliability factor, the responsiveness factor, the quality factor, the timeliness, it's hugely demanding. Sure. And the people therefore go through, when those things happen, we never flinch, and we are always trying to keep in step. As long as we can do that. So really the question, the other piece here which Rajeev also mentioned is the talent side.
Sure.
Actually our game will scale with the degree with which we can scale our talent. There is no problem in the marketplace.
Right.
The market is complex, large. You can call addressable TAM, non-addressable TAM. We create our own marketplaces. We create our own opportunities. The supply side is the key. We need another 100 data scientists. We have a problem trying to find them and then train them and then orient them. And then data scientist is one part to be embedded into the marketing space. Therefore, they need to be marketing driven is another piece. Same with creative. You get talent. They need to understand the complexity of our clients because they're all large and complex.
Sure.
So the more we can put these things in place, that's what drives the game.
Let's talk about your financials a little bit in that case. The company's revenue and EBITDA. If you just talk about the CAGR growth over FY21 to 23, we've seen a 30% growth when it comes to top line and approximately 70% in terms of your operational performance from FY21 to 23. Help us understand that going forward, what could be the drivers, A? And do you think, is this the number that is going to be scalable again, or you think you can do a better job than what you've done historically?
Let's look at the numbers. You can choose to look at fiscal 23-22 to first understand how is the P&L broadly structured.
Right.
Okay. So given whatever is your revenue X,
right.
Okay, the other income in our business is very minuscule, so I'll skip that. At the cost level, there are 3 broad cost lines. One is obviously the operating cost, which I will say is variable. Historically, if you would see that this variable cost is approximately 32% of our top line, which basically means that we have been generating a gross margin of 68%. When I say gross margin, revenue from operation less operating expenses.
Okay.
Okay, it's about, so if you do a 300 crore business, you get a 200 crores of gross margin broadly. Okay. Now below this, there are 2 costs. One is obviously the people cost.
Right.
The second one are basically the establishment and the corporate overheads. Now, by the very nature, you would appreciate, Nickey, that this is, in a manner speaking, kind of a fixed cost. So what happens is in this business, when the revenues grow at a certain pace, and if these costs do not grow at that same pace,
right,
it gives you an operating leverage.
Sure.
So if you look at our performance for the last couple of years, what you would have seen is as revenues have grown at a certain pace, the these costs have also grown at a pace, but not at the same pace at which the revenues have grown. And that has given us operating leverage. And that has led to our margins grow both in absolute terms as well as in percentage terms. So if I was to put down in percentage terms, in 21 it was about 16% thereabouts. In 22 it was about 18%. In 23 it was about 21%.
Okay.
So
there's a 23% to 21%, there's a dip there. And what about the first 6 months?
No. 16% to 18%
okay.
to 21%.
Okay.
So that's how the margins have grown.
And the first 6 months?
First 6 months is a very interesting stats for you, because typically what happens is our revenue, if you will see in even our RHP, is mentioned very clearly that typically and historically we have seen that 40% of our top line comes in H1.
Okay.
Therefore, obviously, corollary is 60% comes in the second half. So that's on the top line. Now, assuming the gross margin, we just discussed the gross margin, but the costs below these gross margin, which is basically the people cost and the establishment, the corporate overheads. Now, these costs more or less play out equally.
Okay.
Okay. And therefore, clearly, the margins in the first half in this business will always be muted as compared to significantly muted as compared to the second half because of the seasonality factor.
Okay.
Seasonality is not just for us.
It's for the entire industry. But that's the one thing that we wanted to get out of the way. There is a margin dip in the first 6 months.
Happen.
But that is something which is in lines with what the industry norms are looking like. But what kind of scalability can you look at for the entire financial year in that case? Do you intend to match up to the margins? You think you've already been scaling up, inching up your margins? You think this year also you'll continue with that trajectory? So,
Nickey, very simple. If this is a revenue, three things we generally bear in mind. Now, how it plays out in the future is for anyone to see. But there are three things which we bear in mind. Is A, we focus on revenue growth. So we see how the revenue is growing. We try and see how we are able to then manage our cost growth in line with the revenue growth. And if we're able to achieve this, like what we have been able to achieve in the past, you would have seen how our margins have grown. So it starts with your revenue growth really.
So what numbers are we looking like? Is there a projection there? Do we intend to do better? That's the bare minimum that we'd want to know, I guess. We will understand your cost drivers and the way you go about with things, but just the numbers in that case.
As people who are responsible for running the business, I'll tell you how we look at it. Historically, I mean, I've always said, if we can, again, history, okay? The years we do 15% plus, we do very well in terms of revenue growth. And there is another metric which is useful. Our sector grows twice the GDP rate of GDP growth. This is again historical, it's a worldwide thing. So if the GDP is growing at X%, the sector will go at 2X%.
Okay,
and we will be very much in line. We have been very much in line.
Okay, at least there is some ballpark number that is coming about. I don't know how much we can plug in those numbers in the financials, but let's talk about your receivable days. It's roughly around 100 to 107 and is on the higher side compared to 70 to 80 days of payables that the company expects to maintain going forward, right? How do you intend to optimize that? Any guidance on that?
So if you look at last couple of years, Nickey, our number of days of receivables have only been going down year on year, and our endeavor will continue to be in that direction. Needless to say, we have been bringing it down and we'll hopefully continue to bring it down. So our endeavor is always there. Likewise, our payables, it's also been coming down. So if you look at the numbers that are there in the RHP are basically the year-end numbers, and don't forget that second half is 60% of our revenue. So the numbers do get skewed in the second half of the year when you look at the number of days. So receivables were about 102 days for 23, and payables were close to about 118 days. We clearly believe that we want to bring down the payables as well to thereabouts 89 days, which is what we have articulated also in the RHP.
By achievable by?
I don't think it should take us too long to achieve that. Let me put it this way. Yes, absolutely. We want to bring it down, clearly articulated in the RHP, so I'm not going outside that box.
I think that's a disclaimer coming in for your bankers, not the viewers, clearly.
No, it's not so much. Yeah, it is.
Please carry on.
So that's basically where it is. So our journey for optimizing the working capital continues. Having said that, if you look at the year end, our net working capital is very marginal
Right.
because the payables and receivables more or less balance out. So I don't think we have an issue out there, but opportunity for improvement will continue. Payables will bring around 89 days, and receivables, as we have already been bringing down over the last couple of years, our pursuit will continue.
Okay, just tell me, it's more on the parting notes that I would want to understand the trends, industry-wide trends, how are they shaping up? And do you intend to diversify the kind of mix that you're getting from your top 10 clients?
No, I think, we are a client-focused organization.
So the 50% from the top 10 continues to be the math that we continue to look at?
No, you can look at
40% from top 10?
It will be so. There may be some variations in those numbers, but broadly that will be the case. Actually, the business works very well, not with a long tail of clients.
Okay.
It works very well with the concentration of companies that we learn more and more about them, their consumers, their issues, and how deeply we can embed ourselves and what further disciplines we can service them with. So we look for deep engagements, and I think that is the deep engagements creates its own competitive strength. Don't forget that.
And any particular trends that you think are uniquely shaping up for your industry as per such, which will have like a...
I won't call it anymore a trend. It's already here. This is the digital ecosystem.
And that's pretty much where you are tapping in on also, which is Moneycontrol, the fully digital platform.
It is no longer a trend. If anything, I think we are operating in a. Actually, we are very fortunate in the sense that we have the communications piece, which is very strong, and we have a huge track record there. We also have a fantastic track record in gathering and disseminating information about the market, which is unique. And we have added a layer of customer data analytics, and we sit at the crossroads of marketing and technology. So we have been able to evolve. We have not lost our core, but we have been able to add these additional competencies. I think therefore, and this we have been able to do only because we are all the time saying what is it that the clients are looking for. You talk of a trend, talk of data, no? It has exploded.
Sure.
And that's a space we spoke about 20 years ago. It took us a few years to create the competence, and we are now at scale.
And if you will appreciate, Nickey, the entire proceeds, almost practically the most substantial part of the proceeds are being done to increase our internal capabilities in that direction.
I could say that working capital requirements 87 crore, capex for setting up digital video is 10 crore or 11 crore, investment in IT infra 33 crores there, and 21 goes for the new customer experience centers.
Which is the marketing infrastructure, where the working capital is 54 crores and the studio is about 11 crores.
All right, I think that we're just going to leave it at that. And thank you, gentlemen, so much for joining us and taking out the time and highlighting all the details of your offering.
Thank you.
With this, it's a wrap. And thank you so much for tuning in.